Wole, interesting, a nice pickup in volumes yesterday, $23.26 million moving through the market. Of course, we know the market was closed before that interest rate announcement. What are your thoughts on how the market's likely to react to this today?
I think it's going to be very interesting, Sam. I think what people will really be looking at is that GDP figure down to 6.17% in the first quarter. I think obviously that has implications for businesses, more so consumer-focused companies. So it'll be interesting to see how the markets react to that. Perhaps people feel that that number at 6% is still relatively safe if you're looking at the long-term outlook for most of those consumer names. But I think that that is definitely a worrying trend.
We saw some interesting volumes also moving through
total. All right. Well, joining me to give me some perspective, of course, is Oluyomi Okin on those MPC figures and the impact that they may have on the market going forward. It's Oluyomi Okin, Head of Research at Cardinalstone Partners. Thank you so much, Yomi, for joining us on the show. But before we get to the MPC and the impact that it may have, I want us to just touch some news flow around FCMB and Access Bank. Ratings reviewed by S&P for both banks. We're hearing elevated loan losses in 2011 are a concern in regards to FCMB, and as a result, they are downgrading their risk view of the bank from adequate to moderate. And then in the case of Access Bank, we've seen a similar downgrade for the risk position, but an upgrade of their business position.
Okay, for Access Bank, I think it's much expected. It's not totally unexpected anyways, because post-merger, the bank has been able to substantially scale up its balance sheet. It competes with the likes of GT Bank at the moment, and in terms of its platform to distribute its products to penetrate the market, we've also seen some kind of upscale in that segment, in that area as well. So overall, I think for Access Bank, it's not unexpected that there is a positive view on the business position of the bank. It's basically premised on about a 10% share of the market at the moment. That's in the first quarter of the year compared to about just 6%. And we had in the last quarter, or maybe for the better part of last year. So that for me, it's in line with the bank's strategy of trying to establish its presence amongst the big players in the banking sector of the industry. But for FCMB, I think it's just like you rightly mentioned, those provisions that hit the bottom line last year, and more importantly, the fact that the source of these provisionings were not just from the loan book. We had provisioning from capital market related events, and
of course, capital market is still
in the doldrums at the moment. So all of this put together for FCMB, I think it's a source of concern. We think, from what management has said, the cleanup should have been done, but we wait to see what happens in this year. S&P would probably change their position if they see the reason to do so.
We wait and see that. Okay, quick view on the impact of the MPC decision. Holding rates on hold as widely expected at 12%. Give us your thoughts on how the equities market may react to this.
Well, I think we might look at it from what would happen to the bond market, for starters anyways. And my sense, even before the meeting, was that a lot of traders in that market felt that the MPR would be left constant. About 80% of traders felt it would be left constant. So I would want to think that it's already been priced in, into yields that's in the market. And if that's the case, we don't expect yields to trend significantly away from the current levels, about 15% on the average across different maturities. But relating that to the equities market, probably we're just going to continue to see the kind of intraday volatility we've been seeing in the market for the last 2 weeks. Of course, the first quarter earnings season was good, but I guess it's done now, and the euphoria surrounding those results would start to fade away, or has started to fade away anyways, and that will probably remain the case for some time to come. The MPC decision on the MPR wouldn't really have much of a bearing for now, at least in the immediate term, on either market. For me, it's probably what the comment of the CBN governor saying that they will be watching closely what happens in terms of the global economy, as well as global financial condition, and they have the liberty to change this stance at any point in time if they deem it necessary to do so, which I think is what we should be looking at going forward, because globally, I think things might get worse. from where we are right now. We've seen Europe especially struggle to keep pace with the problem in the region, and policymakers and politicians have had to come in the last minute to save the day. And I think that's probably the way it's going to be for now. Of course, we are looking at the Greek re-election coming up in June, which is a major deciding factor as to whether the condition will deteriorate further in Europe or might improve.
Europe is the big mess we have to deal with for a while here. Thank you so much, Yomi Okin, Head of Research at Cardinalstone Partners, giving us his thoughts on the MPC decision and its impact on the markets. Back to you, sir.